Welcome to Module 3 of our course in financial accounting. This is the hardest module so far. In my first midterm of my class, this is the #1 subject that students struggle on: adjusting journal entries. It takes what we learned last chapter in Module 2 on journal entries, and it just cranks up the difficulty a little bit. So let's jump into it. Here is an example of a typical journal entry, not an adjusting journal entry, we'll get to that in a minute, but a typical journal entry from chapter 2. It's January 1st, so this is a transaction. I buy a car for $20,000 cash, right? That's what's happening here. And you'll recall this table. If you don't remember how it works, go back and review chapter 2, but we've got to do a journal entry. So let's start with the car. I would say, okay, I got a car. What is a car? Well, a car is an asset, and we have more cars today than we had yesterday. So I'm going to, on January 1st, debit, credit, I'm going to debit my car. So debit my car asset by $20,000. And what's the other side of this? Well, my cash, that's also an asset, so it's still an asset, but my cash asset is falling, right? It's going down, and so in journal entry parlance, that means we've got to credit cash. All right, so you're probably looking at this transaction going, that was pretty straightforward, especially if you hung in there for chapter 2. You might be saying that's a beautiful drawing of a car. It is, thank you. But you're also saying, okay, this is pretty straightforward. Where's this tricky business of adjusting journal entries come in? And here's where it comes in. So we drive the car for the year, right? We buy a car, there's actual things happening in the world. We're driving the car, we're using the car for work, we're making good use of our new piece of equipment, the car. The year goes by and we go, it's time to prepare a balance sheet. So it's December 31st, we make a balance sheet for our company, we list our assets, our cash, AR supplies, our current assets, and then we go to list our long-term assets, and we've got this car asset, and it's a $20,000 car. Now remember, we're trying to communicate the value of this car on December 31st. The car, and I don't think anyone would dispute this, on January 1st, a year ago, it was worth $20,000 because that's what I paid for it. It's December 31st now, I'm preparing a balance sheet. I don't think it's fair to say that my car is still worth $20,000. I've been driving it. It's experienced wear and tear. There's mileage on the car that I'm putting on the car. This car should clearly be worth something less than $20,000. So that's where adjusting journal entries come in. A transaction is, I bought something for cash. There's a receipt. Some financial event happened. An adjusting journal entry is, I'm about to prepare financial statements, I list all my assets and liabilities, and I look at them and I go, something's not quite right here. Something's missing, something's wrong, and in this case, my car is not worth $20,000. So this chapter, we're going to learn how to calculate those adjustments. We obviously want to adjust the value of the car downwards. How do you do it? Well, there's a little bit of a math puzzle in front of every one of these adjusting journal entries, and the best way to learn how to do this stuff is by doing examples. So we would call this, the fact that the car's losing value over time, we would call it a depreciation adjustment. We'll learn depreciation adjustments. We'll also learn 4 other types of adjustments. Rather than introducing them all in this video, though, I think it's best to do it by doing an example. Problem 3.1a, I don't do this in many of my intro problems. You should work through problem 3.1a with me, and we'll introduce all 5 types of adjusting journal entries. We'll go through all the types of adjustments. Thanks for watching, and work through examples. If you want to survive adjusting journal entries, do lots of examples. Bye-bye. The next video in our series is right up here, and if you want a supercut of all of the videos in this series, that's the one down below.